Central Bank of Nigeria has announced that international money transfer operators, IMTOs, can now access the CBN window directly or through their authorized dealer banks to execute transactions for the sale of foreign exchange in the market. It's part of a new initiative to improve local currency liquidity for the settlement of diaspora remittances. The central bank stated that this is a part of its commitments to the efficient operation of the foreign exchange markets and facilitating increased remittance flows through official channels in a circular that was sent to all deposit money banks and IMTOs on Monday. All right, let's talk bonds. June bond auction, federal government, I think about 450 billion was what was offered. Those are the numbers in front of you, 5, 7, and the 9-year. I think those are reopenings as well. Total bids, highest coming for the 9-year. Successful bids, same story. Subscriptions, same story with the 9-year getting the most of that. The others are undersubscribed. And then you've got okay, at the bottom there, instead of total sale, that actually should be the rates. Those are the marginal rates at the bottom. So Kingsley Okereke is with us. He's the head of Securities Dealing at Zedcrest Group. Happy to have him in the studio with us. Kingsley, good morning to you. Thanks for being on the show.
Good morning to you, Rotis. Thanks for having me.
What do you make of those figures as far as let's start with subscription. I mean, how would you gauge, because I saw the 5 and the 7 undersubscribed, the 9 oversubscribed. What's your interpretation of that?
Well, I think pretty much largely the market has been apprehensive, in recent times. We've seen that markets have been quite settlers, quiet and lethargic because people are pretty much concerned of the overall macro. But even with the subscription levels, you could see that it still did not meet the full size on offer totally. And people pretty much were just, coming into the market to, show their apprehension, and that's why you saw the marginal risk actually close that high. And I think this is the highest levels bonds have printed, ever, Yeah, so the highest we've seen prior to now was 20.45. The only time we had it at 21 was the private, sale to specific banks, at 21 levels, and we never saw that come to the market. But with this, at these levels, it just shows to some extent that government still needs money, and that appetite for funds have pushed them because people were pretty much on the higher range of bids, and that's why. For them to be able to get something, substantial, they have to print at those levels.
Yeah. Who can, actually, you know what? Okay, you already talked about the stop rates. Who can participate in for these bonds? Is it institutions, banks, or individuals? Who can buy them?
Well, pretty much with the minimum subscription levels is pretty much 50 million 1,000.
Hello.
So you pretty much need good flows to go into there. So you always find that it's the institutionals that are pretty much targeted. That's why you have the savings bond.
Yeah.
And the savings bond is pretty much targeted towards the retail segment of the curve. So, but you still see that sometimes you approach your bank and they with the size that they have, that they're able to sell to you at some proportion. But, pretty much you don't have as much clients on that retail segment actually buy bonds. What they are usually used to is buying of treasury bills, just because a bit of technicality with how bonds work and all that.
Yeah. Okay, so you're saying that if an individual wants to get them, you have to go through a bank or a broker dealer, and you can get
yes.
At a smaller entry point.
Smaller entry point. Yeah.
Now So if that's the case, if you're saying there's some lethargy and, they're worried about the macro situation, maybe this might be too far out because we're still in June. What's your rate projection for fixed income space for bonds?
Well, this morning...
Or trajectory, rather, not projection. Let me put you on the spot. But a trajectory, direction. How do you see things moving?
Well, I still see that people will still be this lethargic moves in the market. You still see it continue until we can see clear policy pathway, especially on the fiscal side. Yeah. Not really with the monetary side. I think everybody pretty much knows what the CBN is targeting. But on the fiscal side, we need to see more vibrant and robust policies. If you look at inflation, you see that inflation is more structural than it is monetary. Because even the federal government's activities with the expansionary nature is actually contributing to money supply. That is still driving inflation. And so we need to see more. You look at our Greek, to me, is more structural because we have low productivity in our Greek, driven by mainly insecurity, but you still have a lot of other touch points. You're looking at storage facilities, you're looking at supply chain disruption, looking at also road networks and, being able to transportation facilities and all that to move goods, at a large scale and all that. You could also touch on maybe we are still more in the subsistent farming kind of technique. We've not seen, reach huge, large-scale commercialized farming, layering technology over that to scale, to be able to, give us the kind of food sufficiency that we need. And if you look at inflation with food numbers, you would see that we are at 40.6. And, it's something that we really need to look at. Pretty much in my mind, we are in a food crisis and we really need to look at the low-hanging fruits, use policies to drive that, to encourage investment flow into that space such that we can see food prices dissipate. If not, we should be looking at 44%.
Wow. Okay, you know what? I'm glad you touched on inflation and what needs to be done. And you were putting, I guess you're focusing a lot on the fiscal side. The charts, though, what do you make of the divergence between year on year and month on month? Because if we pull up our chart, so this is year on year. You can see the trajectory. It's just climbing, right? It's like an aircraft that's taking off a tarmac. But if you look at month on month, and I know that this is what at the last MPC meeting, Governor Cardoso kind of mentioned. So you can see that. What's your take? Are you saying this is not enough? You need to see the movement in year on year, or in fact, we're asking our last guest, John. We talked about the inflation impact in the UK. Yeah. He's saying people don't feel it. So, a chart is not the answer? How would you interpret the fact that month on month seems to be decelerating, but year on year still rising?
Well, I think it's the activities of the central bank that is actually driving that.
Yeah.
But we need to see more. As we said, for me, I need to see fiscal consolidation, right, to be able to see more gains on the back of what the central bank is doing. So, to see more coordination between monetary and fiscal side, and that's why this supplementary budget move pretty much sometimes could spook a bit of concern, because you're trying to tighten on one side, but the other side is expansionary.
Yeah.
So that's a touch for concern. So we need to see more. As I said, the low-hanging fruits, we need to see more export promotion strategies and more import substitution strategies to be able to ensure that, even our food is going down. Even on the energy side to things, we need to ramp up production on oil significantly to get back to 1.8 and even surpass that. Government, I think their projection was 2.4.
Right.
We need to be hitting those numbers because that is what is going to give you good accretion to reserve that will give you the ammunition to fight inflation and to fight currency speculation.
Yeah.
So for me, we need to see more movements in that corridor so that, month on month might be decelerating, but in actual terms, even with you, if you go to the market, you would even say that those inflation numbers are not the actual reality of what you were seeing in the marketplace.
Right.
So we need to see more concerted efforts.
Yeah, Kingsley, is power the silver bullet here? Because if you think about what it costs to fuel a generator, we had a great guest, I think it was last week on our tech segment, who came here to talk to us about solar energy and so on and so forth. But even that has its costs, right? The renewable transition and so on. But some say, many say, if you get power rights and people don't have to be spending so much money on overhead costs to power their homes and businesses, then you can probably, the pass-through effects, you will see it.
I agree.
Yeah?
I completely agree with that. Overhead costs, it depends on the business. You're looking at 50%.
Right, yeah.
So it's significantly high. Right, and if you see how the world has been evolving, into this digital, economy, you know that it is powered by, electricity, and all that. So we need to be able to solve our energy problems, to be able to move forward, right, so that businesses can be able to scale. And so that can transmit into the marketplace and we can be more efficient because that will encourage innovative ideas, right, to be able to, deal with the 21st century challenges. So for me, I believe that he was spot on there.
What do you think happens at the next MPC meeting? Because I guess, with month on month decelerating, but year on year still rising, do you still think there will be hawkish or will there maybe be a pause I guess rate cuts are out of the decision, out of the conversation here. So
for the rest of the year.
Right. So what do you think they?
Well, I think they will note what the positives with inflation month on month and also year on year, because year on year the pace has slowed.
Right.
So for me, my projection is just a marginal uptick in inflation to just the lower 34 levels, maybe 34.01 thereabouts. So that's what I see. I still think that they remain hawkish. So it's either, for me, I just think they would rather hold.
Yeah. If
at all they will hike, it's just be a modest hike, just to be able to tame that push upward, not push in inflation. If they decide to hike, will be modest and they will hold. Then on, you just to be able to allow the gains of what they have done transmit into the economy. But the sticky part with inflation is that you have the wage growth. Right? That is coming. We had the discussions with labor and government. You also have electricity tariff. That's another issue that could propel inflation. So as this discussion become more and more rampant, the monetary policy might necessarily take a view on that. Remember, if you look at the British economy, they did the same thing. They are already at 2% in the British economy. But what did they do? They decide to halt, any move, just keep everything steady. Why? Because of election spend. They already know that they are close to election period, and they want to see how that feeds into the economy before they take that decision to cut. We know that BOE would cut rates, but they're just allowing all these impacts to feed through the economy before, so that they can be more data reliant to be able to take effective decisions. And I think that's where the monetary policy is going to come in. They will look at the plausibility with all these issues and how soon and the kind of impact they will have and how soon they will be transmitting to the economy in taking that rate setting decision.
Fantastic. But despite all that, it's still about the fiscal side. As far as the fight against inflation is concerned, the fiscal side still has to take over here.
Yes. Inflation is structural. They need to start looking at the low-hanging fruits. Divert some of their, energy towards, fixing the low-hanging fruits, in the economy. Look at agric. What are the quick wins that they can do there to get that up and running? Power sector, the same thing. What are the quick fixes? Infrastructure. So channel a lot of the energy and revenue that you're generating into those ones, and rather look at it holistically and start to pick and choose which ones is as priorities now, and later you can deal with the others. Because if you look at it, even when you're looking at bonds and treasury bills, there's going to be a rollover risk coming in next year, with the amount of treasury bills that they've raised, because everybody's forward looking with what has happened in bonds. Everybody's looking at the NTB auction coming in on Wednesday. What's going to happen? How is the government going to, how are they going to react, towards that? So it's pretty much interesting times, and we as market watchers just staying abreast of things and analyzing things as they go. But we believe that the fiscal side needs to step up.
Kingsley Okereke, Head of Securities Dealing at Zedcrest Group, thank you so much for joining us to talk about the latest bond offer there, and also what needs to be done to try to tame inflation. Really appreciate your time.
Thank you so much.